Well, let's talk about this a little more. Let's speak to Michele Geraci, who's head of China Economic Policy Programme at the Nottingham University Business School. Thank you so much for being here on the programme. I mean, the Chinese authorities yesterday said it was a one-off. Today we have a similar move. I mean, what is going on?
It's going to be one-off every day from now on. The Chinese government has taken a step back. Before, they were every day intervening and fixing the exchange rate, and from now on they are trying to let the market fix the rate. And like in all markets, every day the market will fix a new rate. So there is indeed no surprise that today the market has chosen a different value than it was yesterday, because now the role of the government is less than it used to be, and the market is taking more and more of an active role. So we should expect...
Well, I'll ask you a little later where that takes us to eventually, but in terms of, in simple terms, assess for me the winners and the losers here.
The losers are the Chinese people, because when the renminbi loses value, people are generally net importers of goods. They buy iPads from abroad. They do not export anything. The winners are those corporations that live off exports, because a lower renminbi should boost their exports. So in a way, lowering the renminbi value is a transfer of wealth from the individuals to a subset of the corporate sectors. So losers, people; winners, export companies.
And that's internally then within China. What about all of its regional neighbours, its trading partners? Because we were hearing from Delhi only a short while ago, their nervousness, their shock at what is happening, and their worry about the impact it will have on their economy.
Indeed, but you know, we are looking at only 1 to 3% overall change in the rate. In terms of currencies' impact on foreign trades, we need to look at 5 to 10% before we see any significant impact. So the worry is right to have, but now that the market generates the value of the renminbi, people who worry could now go and buy the renminbi. If the US, for example, is worried that this gives China a, let's say, unfair competitive advantage, now the US companies or US fund manager can go and buy renminbi in the market and boost the price up.
It's interesting, you're talking about America. As we were watching our piece there, you thought this will have a significant effect politically in America.
Indeed, because let's not forget, we are getting on the last few months, a year more on the election for presidential in the US. And now we're already seeing voices by senators in different constituencies in the US all raising the voices against China, who is unfairly pricing the goods, the old mantra that we have heard for years. So this gives, let's say, right-wing Republican Party a lever. They can say, you know, the Obama administration for the last 8 years has not done anything to preserve the jobs, safeguard the interest of the United States. And China is doing it again.
A couple of quick thoughts. Our Indian guest, who used to be an advisor to the finance minister, was saying he thought it was very possible we might see a currency war as a result of this. Do you think that is possible?
We have seen currency war. QE 1, 2, 3, 4 is a currency war. European Central Bank is doing currency war. The UK Central Bank has done a little bit of that. Now China is not doing it. China is letting the market decide. It's the opposite in a way, but it is perceived as a currency war.
Might follow suit.
Because they might follow suit.
In terms of the basic premise from the Chinese, I mean, they've got their slowest growth in 25 years. Can it work? Can this sort of letting the market set the currency rates in the hope it boosts their exports, is it likely to succeed?
No, they are testing the waters. These are tests for renminbi internationalization. I'll tell you something very insightful. The price of the renminbi is going down because there are more sellers than buyers. Why is that? Because Chinese people themselves are selling their own renminbi-based assets and diversifying their investment into other currency, other countries. And therefore, renminbi has this downward pressure. It will not work to boost exports.
Final quick thought, because we're out of time. 3% we've lost in 2 days. You talked about it going down and the market setting the rate. Where do you think we'll be in about 3 or 4 months' time?
I think we are
where the Chinese currency is.
-5 to -10% lower than it was 48 hours ago.
My goodness. Well, that is interesting. Michele Geraci, thank you so much for coming in and talking to us. Thank you. Now on to other news, because the Croatian Prime Minister says he cannot confirm whether militants in Egypt linked to the self-styled Islamic State group have killed a Croatian hostage, but he said he feared the worst. The Egyptian government is investigating after militants